Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be focusing on the continued move higher in precious metals, especially silver today over $34. The momentum trade for gold, silver, and even the underlying stocks has to be encouraging for all of us investors who are in these markets, and even the potential catch-up trade that we're seeing some of the underlying equities undertake right now. I am chatting with Craig Hemke, founder and editor of TF Metals Report. I will post a link to Craig's site in the show notes. Craig, look, as I said on the onset, precious metals, along with a number of other markets, but precious metals especially, this seems to be a momentum trade over anything else. Dips are being bought. We're seeing higher highs, higher lows, and consistent breakouts. Gold has hit all-time highs, I think over 30, maybe 40 times this year on a daily basis. Silver now above 34. This is a very significant breakout. Craig, what's your takeaway from, I guess, today's action, but even more so this uptrend that we've been in for over 7 months now?
Yeah, it's fun when the momentum trade is working in our favor for once. We seem like we get momentum to the downside, or every other sector has momentum and we don't. But for once, yeah, we're cooking. And it's very encouraging to see today, Monday the 21st, silver not just head right back down. You know, last week was an interesting week in that it was prices up 40 cents, then down 40 cents, and up 20 cents, then down 20 cents. And going into Friday was up only 1 cent on the week. And then Friday was just relentless. I mean, just nonstop buying. I think we closed the COMEX session north of 33, like 33.20 or something like that. But then by the time the afternoon, the after hours Globex wrapped up at 5 o'clock Eastern, we were 33.90. So we had a pretty good head start going into last night when things reopened. And, you know, the concern would be you just had this one big run of 6% or whatever it was, $2 on Friday. They turn around and give half that back. But that hasn't been the case. Silver has extended. No, I don't know. What are we now as we record this? North of 34. So it's up 15 or 20 cents off that Globex late afternoon Friday close, but it's doing that in the face of what's the dollar index up today? Another 50 cents?
Yeah, the dollar's
bonds
been
are
strong.
Yeah, bonds are selling off. Rates are up 8 basis points. And yet silver has been able to follow through. I mean, it makes you wonder. I mean, what if the dollar was down 50 cents today? So I think that's very encouraging. We can talk about where this breakout might head next, but boy, as long as we stay up here, the longer we stay up here, even if it's just for a day or two, the likelihood that prices are going to surge again will grow.
Let's talk about the underlying equities, though, because those, I think, have been standouts. I've been much more bullish on the sector and on the stocks, even though we keep hearing that maybe the stocks aren't providing the leverage that investors want. Fair enough if you take a look at long-term charts, but take a look at any short-term charts. And if you do want to cherry pick some of the dates, especially, let's say, this year, picking the lows in a number of these stocks, most of them right around that beginning of March time frame. A lot of stocks are at least double, if not up more than that. GDX in that time frame is also up over 60%. And most recently today was breaking out above that 2020 high of 43.30. It is pulling back. We're seeing a bit of a reversal day for GDX and let's say GDXJ, even SIL. But overall, these stocks have been performing very strongly. What have you noticed within the underlying equities?
Well, and you're right. I mean, there are a lot of names that are more than doubled since the 1st of March when gold took off that Friday, the 1st of March. And so I guess that's not surprising. I mean, again, it's all about your time frame, right? You look back and you think, you know, the GDX is where it was 2 years ago or 4 years ago. And so you think, well, it hasn't done anything. And gold's, you know, versus 4 years ago, up 30%. And so all of that can be frustrating. So it's a function of, you know, I mean, almost every individual perspective when they think about it. But you're right. And the GDX looks like it's closing in. It's looking to make a daily close that up north of 44. If it does that, would be the highest in like 12 years. So it's going the right direction. I would imagine most of those shares will continue to be bought over the next week to 10 days and maybe run into some profit taking once we start getting into earnings season. I mean, we're a couple days away from Newmont. Agnico Eagle is on the 30th. Kinross and Hecla, Alamos, Wesdome. We get into all those the first week in November. And so the pattern is those usually get bought in the expectation that they're going to report good earnings, and almost all of them are certain to do that. And then it's like, well, we can take the money out of here and then, put it back in, if gold stays up and we're ready for the next earnings season. You actually see this a little bit on the chart, Corey. I'd invite anybody to pull up a chart of the GDX and lay the 50-day moving average on it. And this is really remarkable. It came down, kind of rode along, and was slightly below the 50-day at the end of in most of June, and then it shot to a new sequential high in July. Then it pulled back to the 50-day in early August, and then later in August, it made a new higher high. And then it pulled back to the 50-day in early September, and later in September made a new higher high, and now it's just done it again here in October. So we'll see where this next high traces out, and then maybe we'll take some profits and wait for the 50-day again.
Well, and Craig, I think the most important thing about this is that, look, we have upward sloping moving averages. Those are supportive of bull markets, higher highs, higher lows. That all plays into those. And these dips, they've been relatively shallow and they've been bought back very quickly. It's a true bull market nature here. What, I guess, are you looking for in terms of the next dip? It's just following that 50-day and then trading higher, or would you just simply let this position run until maybe a significant breakdown happens, since you have to assume a lot of investors are in positive territory now?
Yeah, that would be the responsible thing to do, and I've never been responsible about it in that regard. You would wait until you stop making the higher highs and the higher lows, when all of a sudden you make a lower low and then a lower high, and then you break down below that 50-day. Then you're like, oh, okay, maybe this has run its course, but that hasn't happened yet. It's been a really steady 7, almost 8-month rally. Now, it's not going to continue forever, and that's why people need to pay attention to this kind of stuff. But you can certainly see that pattern play out, not only in the GDX, but several of the components. Agnico Eagle is one of my largest holdings. It's been the same way. These just higher highs and higher lows. And as long as the gold price stays high, you probably see that pattern continue. And you got to be selective. You got to be smart. And you got to know, like I said, when to maybe take some profits. But the chart will help tell you that if you're paying attention. But in the meantime, we'll just see if we can't rally again here a little farther in the metals. Gold, I thought maybe there'd be some technical resistance up in the high 2600s. And nope. Blew right through there. And I'll give you one thing on silver. Corey, I mentioned gold, how it broke out on Friday, March the 1st. That's when it finally broke out of a consolidation pattern that had been in for 13 weeks. It got above that 2000 level on Friday, December 1st last year. And then it went into a 13-week consolidation, finally broke out on March the 1st. And then over the next 6 weeks, it rallied about 15%. Well, silver's had its own problems with about the 28 to 29 level. It finally broke out back in May. It then consolidated, if you count all the way up until last week, for 17 weeks. So if silver just kind of follows, big brother gold, but also then does it at a, maybe 2x manner that what gold did, we're talking from here, another $6, $7 off of, from that 28, 29 area, go up 30%, talking 38. So we'll see. It's not all sunshine and lollipops, and there's always going to be macro events and geopolitical events that can shake the tree. But as you said, the trend is currently our friend. It's nice to have the macro momentum crowd on our side, and for now, we just continue enjoying the ride.
Hey, the silver breakout is also very noteworthy and important. Silver is very much outperforming gold today, and it's been a strong move higher. Plus, again, it's a breakout that seems to be holding today. Craig, I know you follow a lot of the miners, a lot of the juniors as well, and maybe more of an anecdotal type of thought here. Something that I've noticed is that their stocks moving up on good news, even news that I think is maybe more questionable, not screaming headline numbers in terms of drill results. And there's even some stocks out there that I've noticed that haven't even really released news and their share price is starting to move. Have you been noticing this?
You can't help but notice that, because you don't. I don't know. I've got a basket of stocks that I own. I got them, all listed on my phone. I'll look down. I'll say, "Wow, look at that one's really getting some attention." Obviously,
Yeah, why is that one moving today? And then you click through
right.
looking for news and there's no news.
There's nothing, and you're like, "Okay, well, that's." And I think if anything, Corey, that's the kind of thing that we want to see, where there's just flows of funds finally in our sector. Where people are looking around going, damn, gold's $2,700. Maybe we ought to buy some of these stocks. And you do that often enough. You do that across all of Canada, and you get some people in the U.S. that are interested in the sector. All of a sudden, rising tide lifts all boats, and you get good things to happen. So I think you could clearly make the case that by any measure, so many mining shares and junior and explorers are undervalued. You would think, their potential ounces in the ground are valued at $5 an ounce or $10 an ounce or something like that. And you're like, wow, how can that even be? And so that's the kind of thing we want to see, where you wake up one day and you're like, wait a second, how did that get to be $1.20? Last time I looked, it was 70 cents. That's the kind of thing that I think it's not only kind of self-enforcing like in a virtuous cycle, but it does kind of shine a light upon a flow of funds and interest in the sector that we haven't seen for a while.
Yeah, it's so true. And at least this rally, in my eyes, has been much more sustainable. It has been more selective, and money is filtered from the higher quality companies now into some of these other companies. All encouraging. But, Craig, when you do see, again, on your app, all these stocks, and you see one or two of them that maybe you didn't have the best feeling about. But look, we've all been there, but we're holding those stocks saying, man, should I sell it? When should I get out of this? Are you starting to rotate some positions then due to some of these moves, again, that aren't coming on the back of any news?
I can see why people would, but that, for me personally, that's not really what I do. In my personal account, and I've sworn off the miners several times over the course of 15 years, and I was fortunate enough to start buying into them again almost right at the low in late 2015. And so again, changes your perspective, right? I mean, if I'd held everything from 2011, I'd be like, but most of the stuff that I bought, I started buying in 2015 and 16. So it, changes the lens through which you view everything. But I just try to understand the story. I've got my own little guidelines I follow. If it's in a good jurisdiction, if it's run by people that have done it before, that have a track record, that know what they're doing, then I tend to think, okay, well, we'll just give this some leash and hold on to it. And that's often what I do. I don't trade in and out of my shares very often. Though, again, as we said earlier in this call, there are points, especially with some of the bigger ones, where you can look at it and go, okay, this thing has stopped making higher highs. Oh, and the price of gold is rolling over and all that kind of stuff. Yeah, it might be time to take some profits and move some dollars to the sideline to see if I can't buy back in then at some point later. But for now, it's not the case. That's fine with me. We'll see if we can't ride the ride a little longer.
Hey, even some of these little ones that maybe haven't had those same moves, at least in time frame wise, maybe there's more catch up to be done here as long as we keep on seeing this trickle down of funds. But Craig, what about some of the other sectors then? Some of the other resource sectors and commodity sectors. Those have also been doing fairly well. Some copper stocks I've noticed have really gotten going. There's definitely more interest in uranium. Any other sectors that have your eye? And what do you take away from that environment where it's not just gold and silver, however, those are the standouts. There are other resource and commodity sectors joining in.
The hard part about those other sectors is the patience. Again, well, you can say the same thing about gold and silver, I suppose, but the patience that you have to understand the story and why, like copper, right? We can all look at that. We've all seen the bar graphs of how much copper is going to be needed over the next 5 years versus all the copper that's ever been mined in the history of the world, that sort of thing. And you think, well, that's a pretty compelling supply-demand picture over the next 5 years. But a lot of, myself included, sometimes don't have an investment horizon longer than the next 5 days or 5 weeks. So that makes it a challenge. Uranium's the same thing. You've really got to believe that story. The big news last week about, who was it? Amazon, that's investing in all the little uranium to fire and to make energy for all of their needs. If you believe that story, if you think, okay, there's a real future to this, then you buy some uranium stocks that, again, that you feel comfortable with the management, you like the jurisdiction and the rule of law where they're located and all that kind of stuff. And then you just got to wait. You got to think you made the right decision and wait. Again, the problem is nobody waits. Yeah, you might look at a uranium stock and go, you know what, that could double over the next 5 years. That's 14% a year. But who has patience for just 14% a year and doubling in 5 years when, I bought this AI company and I doubled my money in 5 weeks. So that's the challenge of investing in sectors where that don't have momentum. Now we start getting a continuation of what is just the beginning of some momentum for our sector, and maybe things will move a little quicker. But you got to know the story. You got to feel comfortable with the company and the resource that they have, the management they have, the jurisdiction they're in, and then be willing to put your money where your mouth is and hold on for dear life and hope it works out in the end.
Yeah, look, when you do buy an individual stock, you are taking on that individual stock risk, but it can outperform markets and these ETFs. So I think still having kind of a balanced approach, have some of these ETFs, but then also go down into those stocks, but they do offer different risks, but also different opportunities. Craig, always great chatting with you. Again, Craig Hemke, founder and editor of tfmetals.report.com. Click that link in the show notes. And Craig, we'll chat again probably next week.
Sounds good, Corey. Have a great week.